UNH stock has dominated headlines recently, and not in a good way. Over the past 6 months, shares have plummeted 51%, with a staggering 30% drop in the last month. Yet, despite the turmoil, some insiders and even government officials appear to be quietly increasing their positions. Before diving into the valuation, let's break down the key headlines driving this dramatic shift. At number 1, the Centers for Medicare and Medicaid Services, CMS, has intensified audits of Medicare Advantage plans, including those offered by Unitedhealth. The agency is hiring 2,000 additional staff to audit all MA contracts from 2018 to 2024, aiming to detect fraud and overbilling. This move has increased regulatory pressure on Unitedhealth and other MA providers. At number 2, Unitedhealth is under DOJ investigation for potential Medicare fraud, including allegations of making secret payments to nursing homes to limit hospital transfers, potentially endangering patients. Although the company denies wrongdoing, these investigations have raised investor concerns. And number 3, in May, CEO Andrew Whitty resigned unexpectedly for personal reasons. This leadership change, coupled with the company's withdrawal of its financial outlook, has added to market uncertainty. And lastly, at number 4, Unitedhealth's medical care ratio has increased, indicating higher medical expenses. The company cited rising medical costs as a factor in retracting its revised forecast, contributing to the stock's decline. Given these headlines, let's look at the company's current valuation. Unitedhealth's forward PE ratio for 2025 is approximately 12.92, which is relatively low. This could suggest the stock is currently undervalued, or it may reflect investor caution in light of the company's anticipated earnings decline. And analyst price targets average around 397.36, with a wide range from a low of 270 to a high of 626. Given the recent volatility and heightened investor anxiety, I expect the stock to stabilize in the 320 to 330 range by the end of Q3, once market sentiment begins to normalize. And as for analyst recommendations, out of 27 covering the stock, 6 rated a strong buy, 14 rated a buy, 5 suggest holding, and 2 recommend selling. This distribution indicates a generally bullish consensus, though tempered by current uncertainties. Recent trading activity based on data from Robinhood shows that retail investors have maintained a net buying position in Unitedhealth over the past few weeks. This trend aligns with a familiar strategy of buying the dip, a move many retail traders lean into during sharp sell-offs. On the institutional side, hedge funds also appear to be accumulating. In Q1, they collectively purchased approximately 3.4 million shares while only selling around 700,000, suggesting growing confidence or at least a calculated bet on a rebound. But perhaps most telling is what's happening at the top. CEO Stephen Hamsley recently purchased 25 million worth of UNH shares, and the CFO followed with a 5 million purchase. This is a textbook example of insiders putting their money where their mouth is, and it signals strong internal conviction. It'll be worth watching how this plays out over the next couple of quarters. And finally, yes, even Congress is getting involved. Notably, Rep. Marjorie Taylor Greene disclosed a purchase of over 65,000 in UNH shares just last week. While a single trade doesn't confirm much, it's always interesting to track, especially given the trading track record of lawmakers like Nancy Pelosi, whose stock picks have become infamous in investing circles. I hope you all found this video insightful, and let me know in the comments below what your take is on Unitedhealth. If you haven't already, please drop a like on the video and subscribe for future uploads.